Good evening and welcome to Mortgage News. I'm Gordana Horvat from G&P Finance, bringing you the latest updates in the mortgage and property markets. Tonight we'll be discussing the rising mortgage costs in Australia, the challenges faced by the construction industry due to increasing cost, and the current state of Australia's property markets. Don't forget to stay tuned for our Product of the Week segment, where we'll highlight a standout mortgage product that could be perfect for you. Our first story tonight focuses on the rising mortgage costs in Australia. According to a recent article by The Guardian, Australian households are now spending a significant portion of their income on mortgage repayments. The data reveals that the average mortgage cost has increased to 30% of household income, up from 25% just a year ago. This increase is attributed to rising interest rates and higher property prices, making it more challenging for Australians to afford their homes. Experts suggest that this trend is likely to continue as the Reserve Bank of Australia has hinted at further interest rate hikes to combat inflation. Homebuyers are advised to carefully consider their financial situation and seek professional advice before committing to a mortgage. Additionally, there are calls for the government to implement measures to support first-time homebuyers and those struggling with mortgage stress. The rising costs are not only affecting new buyers, but also existing homeowners who are finding it difficult to keep up with their mortgage repayments. This situation underscores the importance of financial planning and staying informed about market trends. In other news, the construction industry is facing significant challenges due to rising costs. According to API magazine, construction costs have surged again, with Western Australia experiencing an 18.9% increase in the past year. South Australia has also seen a 7.3% rise in construction costs in the June quarter. These increases are putting immense pressure on builders, leading to a record number of insolvencies in the industry. The Australian Securities and Investment Commission reported that over 11,000 companies entered external administration in the 23-24 financial year, with the construction sector being the hardest hit. Amidst these challenges, home builder Metricon is exploring new strategies to stay afloat. According to the Australian Financial Review, Metricon is seeking partnerships in land development to diversify its business and mitigate the impact of rising construction costs. This move comes as the company faces increasing financial strain and looks for innovative ways to sustain its operations. Metricon's strategy highlights the need for adaptability and resilience in the construction industry during these turbulent times. Lastly, let's take a look at the current state of Australia's property markets. According to Property Update, the combined value of the residential real estate in Australia has risen to $10.9 trillion as of July. While national home values have eased slightly, cities like Sydney, Brisbane, Adelaide and Perth are experiencing record high dwelling values. Perth in particular saw a 2% increase in dwelling values in July, contributing to an annual increase of 24.7%. Despite some market slowdowns, the overall demand for properties remains steady. The report also highlights the factors driving these trends, including population growth, low unemployment rates and strong demand for housing. Investors are showing renewed interest in the property market, and first-time homebuyers are taking advantage of government incentives. However, affordability remains a concern, especially in major cities where property prices continue to rise. Experts recommend that buyers conduct thorough research and consider long-term financial implications before making a purchase. The property market is dynamic, and staying informed about the latest developments can help buyers make better decisions. Now, it's time for our Product of the Week. This week's featured product is the Community First Bank Accelerator Package Fixed Home Loan. Designed for owner-occupiers, this loan offers a 3-year fixed interest rate of 5.59% with a comparison rate of 6.29%. You'll need a 20% minimum deposit and includes an offset account to help reduce interest payments. Plus, there's no application fee and ongoing fees are just $3.95 per year. With an excellent rating, this loan is a great option for those seeking stability and cost effectiveness. That's all for today's mortgage news. Thank you for tuning in, and we'll see you next week with more updates. Good night.